Hello, I'm Richard Hunter, Head of Markets at Interactive Investor, and welcome to our look ahead for the week commencing the 30th of March. Well, it's certainly been an interesting week this week. We've had multi-billion dollar, euro, sterling injections from central banks and governments. And of course, most positively, fiscal stimulus has now joined the monetary stimulus that was already in place. Interestingly, it's therefore been an injection of some stability into markets. The Dow Jones for the week is up 18%, the S&P 500 up 14%, Nasdaq up 13%. Even the beleaguered FTSE 100 has managed a 7.5% gain. That being said, of course, as we turn into next week, it will mark the end of the first quarter and take us into April. And looking at the year-to-date figures, we still have something of a mountain to climb. In the year-to-date, the Dow Jones is down 21%, the S&P 500 down 19%, Nasdaq down 13%, and the FTSE 100 down 26%. Next week on the corporate front won't be quite so interesting. The regulators have decided that companies should not report for a couple of weeks until they can get a better handle on what the outlook might look like, quite apart from the fact of the economic impact the coronavirus will be having. At the same time, we're looking for an update from the ECB and what additional measures they might be thinking about. And interestingly, on Friday, which will be the 3rd of April, the non-farm payrolls will be due in the States. The reason this is interesting is that we saw some initial jobless claims figures this week, which the previous week had been 282,000. This week jumped to a whopping 3.3 million. The government, of course, were quick to point out that this was before their relief assurance measures. Nonetheless, it will mean that next week remains interesting, and those non-farm payroll figures in particular. Thank you for watching. Have a great week.